Good morning, everyone, and welcome to Morning Markets, where we discuss the key events over the past 24 hours and how they impact asset markets. Today, we'll focus in on looking back at what happened last week and then a little look ahead to some of the data points that we expect in the coming days. Looking back at what we saw in markets last week, pretty much an ongoing story of the rotation within the US market, with the technology area of the market continuing to be under a little bit of pressure, where we saw the Nasdaq for the week falling about 4 and a bit percent relative to the S&P 500, which was down about 2.5% over the course of the week. So that rotation that started the week before last, continue evidence of that within the US. It's also interesting to see how other regional equity markets performed last week, with the majority of European markets up over the course of the week, and indeed the FTSE 100, one of the stronger performing markets last week, up some 4% on the back of weaker sterling. And we discussed that last week, why sterling had weakened through the course of the week. Just interesting to note, relative to the euro, sterling back to the 108 level, similar level to it got to post the referendum vote in 2016. Other things that we're looking at just in the last week, sovereign bond markets, little change there over the course of the week. So primarily, the most of the activity last week was in equity markets. In commodity markets, story very much about the oil price, where we saw the oil price continue to weaken over the course of the week. Concerns about demand and also supply from OPEC Plus. And as I touched on, the main other area of change was very much within currency markets, with sterling weakening against the dollar and the euro over the course of the week. Other things that I thought interesting to discuss just over the weekend, I suppose, in the tail end of last week, was just the increase in M&A activity, transactions, companies purchasing one another. We've touched on a number of these over recent weeks, primarily TikTok and the relevance that has to the China-US relationship. It looks as if Oracle is going to win out in that race, coming out ahead of Microsoft in their joint bid with Walmart. Other activity, we see Nvidia, one of the largest semiconductor companies in the world, purchasing ARM from SoftBank. ARM is a UK business based in Cambridge. Its technology is at the heart of most of the mobile phones that we use. So that's a very interesting deal coming through. Nvidia paying some $40 billion to SoftBank for access to and to buy ARM, although it will be subject to regulatory scrutiny. Looking then to the week ahead, what can we expect there? Quite a busy week of activity to come through, with a number of central bank meetings, in particular the Fed in the US and the MPC here in the UK. Both of those meetings aren't expected to deliver any policy changes, but what will be interesting is the commentary and the discussion that comes following the meetings. With the Fed in particular and their move to average inflation targeting, we hope that we'll get some more detail from them as to how they envisage that working and the metrics that they'll be looking at. We'll also get the FOMC members' first look and first forecast into 2023. And we all know that forecasting it's very difficult, fraught with error. I think the thing that we're looking out for in that is just an indication of policy guidance and how they see policy evolving over that medium to longer term in the context of the new inflation target. In the UK, again, no change expected from the MPC. Very much about the commentary and how they are thinking about the employment situation as we come to the end of some of the government support schemes that are in place. China will have industrial profits numbers, will have retail sales numbers for August, which will again give us some insight into the ongoing recovery in the Chinese economy. Japan, we see the election of a new LDP leader. That's important because that will then lead through to the individual that will be Prime Minister and their continued direction of Abenomics, that which was put in place by Shinzo Abe when he came to power, and a continuation of that is, I think, very much what the market would like to see. That's it for today. Please join us through the rest of the week. If you're finding morning markets useful and interesting, please do subscribe on YouTube. Many thanks. Bye.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.